Good morning. Day after NVDA day. Did you enjoy yesterday? I didn't. Yesterday was just a nightmare. We'll go over everything. We'll go over the Qs. We'll go over SPY because I heard a technician say it's going to pull back to the 200-day, and that's just the way it's going to be because then we'll have a year-end rally. Blah, 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 blah. What are you talking about? We'll look at all of that stuff for you. Just so you are aware, it may be a slower paced show today. My decision today is it's a Friday, so we want to kind of just look at things. My decision today was not really to prepare other than a few things and to just make notes. And so when I make notes, I don't have these things prepared. But what I want to do is show you the tools that I use. Trendspider, it's on sale. It's on sale for the next couple of days. It is on sale. You get my 4-hour algorithm. You get all the charts. And again, I'm not setting any of this stuff up. I'm just going to do it from scratch. Yes, I have my Trendspider set up. But when you sign up, I send you all of the tools that I have. The 4-hour algorithm, the 65-minute algorithm, the 5-minute algorithm, whatever you want, it's in there, all of the watch lists, everything. And then I'm going to do some things on Seeking Alpha with some of their tools, with building some of the charts so you can compare some things, looking at the performance of other things, and then looking at the news articles. And if you want Seeking Alpha, it's 20% off. How do you get to these things? What links do you use? Well, you use my link tree. It's listed down below, linktr.ee/daily stock pick. It is literally on the screen. Or there's a link down below, whatever you want to do. But when you get here, Trendspider's up here. Seeking Alpha is down here. We'll talk about some other stuff like Webull. But the main thing that you want to do is sign up for the newsletter. And if you sign up for the newsletter, I will include this link for my setup in Trendspider. It's a detailed look, part 1. It is part of the paid newsletter. It is part of the paid newsletter, but you get all of the other things for free. You get the daily email for free. So don't be afraid to sign up. I think it's very good content. If you want to pay for it or if you just want to look at it, I give a free 7-day trial. So sign up for it, however you want to support me. But we're going to start with the Qs. And the Qs, what I've said yesterday, and I've been saying this for a while, is that MACD was super high. Up here at about 5 points again over the oscillator. That's high. What has it done before when it's up here? Well, here we had a little bit of a turn down. Up here, back here in December, we had a little bit of a turn down. Back here in January, had a little bit of a turn down. When it's up this high, you have a little bit of a turn down historically, and that's just going back to November. Now, when the RSI is this high, what do you have? Well, sometimes it continues to go up, but a lot of times sellers will show up. It was a 1% pullback yesterday. It's not the end of the world. If you tuned into CNBC, they were saying, hey, this is normal. Now, where are we going from here? Lord only knows. But when you look at the weekly and you look at these tools, and I've said this before, this looks very similar to this that happened in July of last year. And what happened in July of last year? Well, we went from, it looks like, from the high of it, if you take July 17th to the low of it, it was a 10% pullback to the October lows. And that's July, August, September, October, almost 4 months. So where are we going from here? If it's a 4-month pullback from the high and you assume that this was the high as of yesterday, then you're going to pull back 10%. And if we pull back 10% over 4 months, we've dragged this out 4 months, okay? And we just look at 10% down. If we go there, where are we? Well, 4 months, we're at September, and it's at 407. 407 is about, 408, 409, somewhere in that neighborhood. Now, here's the thing. If we pull this volume-weighted lever back and we say, okay, let's just pull this back to May of 2020 because we're on a weekly, is there any support at that level? No. I mean, at 401, maybe a little volume shelf. We haven't built that factor up. The large majority of people are holding the Qs down there. that means it's going to be the ultimate support. So about 360 is the ultimate support. You will feel pain if we go back to 360 on this Qs. Historically, this is just an upward trend, but if we pull back to the 50-day, that's 400. So where are we going? Your guess is as good as mine. I don't think anybody knows. If for some reason the Fed decides to pull the rug and actually start cutting because they don't want to look political, they don't want to wait till October, you're going to see it take off. If you, for some reason, inflation, and we saw the Fed minutes, because, we're back in a Fed, don't fight the Fed market. We're out of the NVDA market because NVDA reported. Now we're at don't fight the Fed, and we'll go over the bond rates in a little bit. But we are in don't fight the Fed. If they decide, well, inflation's still sticky, we're going to actually raise rates to be more restrictive, you could see this come down to 400. What do you want to do? You want to stay in the market. I talked about yesterday how my portfolio is made up of Apple, Amazon, Google, and Microsoft, and then a few ETFs, and that's like 80 to 85% of my actual portfolio. Am I touching that? No. The reason is because we don't have solid evidence that this is going down. Right now, on the weekly, you have confirmation. If we pull back here to 418, I will make a decision. But it's a Friday, and you don't want to make tons and tons of portfolio big decisions on a Friday. Do you want to trim some positions? Maybe. Maybe you want to take, say you have 10 shares of Apple. What's that, $1,000? Maybe take one and sell it. That's 10%. You sell out 10% of your actual position, but Apple's at a pretty good pace. I mean, Apple's pulled up towards that 190. It's at 188. And we've talked about on the weekly how some of these hit the all-time high and then they hit resistance. We talked about how they hit these points where the RSI is low, and then it seems to go up. Well, you've had a nice 19% gain in Apple. But if we just do a horizontal line here and we look at the last couple of times it's gotten towards 190, what has it done? It's pulled back. Until you can get rid of the resistance, it is resistance, and it becomes support only once you pass it and hold it. So don't expect Apple to all of a sudden take off to 250, but do you want to get out? No, because you don't know what's going to happen. Good news, look at the trend of this stock. When would you have gotten out and gotten back in? And if you're telling me that you would time it at the bottom here, you're absolutely wrong. I hold Apple a long time, and I have not been able to time this stock. So don't tell me that you're getting out and then getting back in. You don't want to do it. If we go and we look at SPY, now the S&P supposedly, I heard a technician talking yesterday who said we're going to pull back to the 200-day. Well, where's the 200-day? The 200-day is this red line right here. So you're trading at 524 on SPY. And if we go back to that 200-day, which is 476, that is a 10% correction. Would that hurt? Yes. Is it the end of the world? Absolutely not. The reason is because if we do that 10% correction, this MACD on a daily is way down below again. And when the MACD gets down here and the RSI is down here, what happened last time? Well, when you take a look at that, that was a nice 7% gain. If you have this 10% pullback, okay, this was not a 10% pullback. This was a 5% pullback. Okay, we had 5% pullback, 7% gain, higher highs. If you pull back 10%, where do you think you're going? You're probably moving up this way. If we look at October of last year, what did we do in, let's see, from July to those lows? That was a 10% correction. Now, from July here, if we just get, say you bought there and you withstood that 10% correction, I'm going to remove this stuff. I'm not going to post this. Remove this segment. And that, 15%. So if you endured this 10% correction, you have actually made 15% on that. So you don't want to get out. In my mind, I think it's a good economy. We have, inflation is sticky, but it's semi under control. You've got spending that is continuing in the market. And you've got a consumer that, yes, is becoming a little constrained, but talk about this weekend. It's Memorial Day weekend, record travel. So I don't think that you want to get out of this market, but that's just a look at where we are a spot. Again, using the tools that you have in Trendspider, you can take a look at this. This doesn't take a large amount of technical knowledge to actually look at this and know, hey, this was a previous high. Where did we go? Oh, we went down 10%. Well, what if I bought there? What if I bought here? That's what it's about. And using these indicators, the MACD and the RSI, as your guide. You can use volume as well. See how volume's trending down, but the price is actually trending up. Well, what does that mean? That's divergence. And you can see all about this stuff on the newsletter. All of this stuff that I pull out. Let's look at, I'm going to go to Seeking Alpha. And what I'm going to do is look at NVIDIA, because yesterday NVIDIA was up 10%. It was good. In a market that was down significantly, NVIDIA was up 10%. It's up 0.8%. I do think NVIDIA we'll look at the chart real quick, because I do want to tell you, rule number one for earnings for usually me is if I didn't buy it before earnings, I'm not selling it or buying it for 3 days after earnings. And I think that coincides with NVIDIA. And the reason is because I want to see where this trades. If this is the reaction that the last earnings had, then you're going to see it go up and then pull back. Buy on that pullback after a couple of days. If you're going to look at this one back from November, it just went down. And that may be what we see. Now, this one currently with the gap up here, this is what it looks like. But if we start to retrace that gap, I continue to say 960 is a buy, but if you don't have exposure to this name, get it before this split. I think the split takes retail from 100 to 150. Again, it's a 10 for 1 split. So every stock that you have now, you'll get 10, which means that the price goes from $1,038 to $103.80. Do not think that that does anything for the valuation of this company. It does nothing. It's like a piece of pie. Okay, take a pizza pie, a pizza. I say pizza pie, but it's pizza pie, Pizza. Okay, and cut it in a quarter. Okay, you just can make one down the middle and then one horizontal. That's it. You've got 4 pieces. Now, what does a stock split do? It just adds 2 more lines, and you go from 4 pieces to 8 pieces. That's it. You just cut it in a small, it doesn't mean the pie's bigger. That's what a stock split does. Historically, it allowed you to buy shares at a lower price. Because we have fractional shares now, splits mean nothing. But it is the psychology. And also, it allows NVIDIA to be considered for the Dow. So who comes out of the Dow? I don't know. Dow's only made up of 30 stocks. But with the price down below, around 100, NVIDIA could go into the Dow, and that would be another bullish catalyst for NVIDIA. But let's take a look at some of this charting. And what I want to do, I don't know if I can do it, but I want to see if I can do this. Let's select symbols, and we will take Bitcoin. Yes, I can do it. And we're going to get rid of the S&P. But what I want to do is compare NVIDIA's return to Bitcoin. And if we just look at year to date, NVIDIA is actually beating Bitcoin. So crypto mongers, if you look at 1 year, Bitcoin is underperforming NVIDIA. If you look at 3 years, Bitcoin is underperforming NVIDIA. If you look at 5 years, Bitcoin is underperforming NVIDIA. So the actual gain on NVIDIA is beating your crypto, which is crazy to me. I saw this happen. I couldn't believe it. I wanted to chart it. It was interesting. Interesting to say the least. Now, one question that I had yesterday, I think Pete asked me on email. He goes, hey, you mentioned FFIE. Where do you find these things? Well, there's a couple of things. You want to pay attention to the news, obviously, for any short squeeze. But there's a couple of ways that you can find some of the big movers. And what you can do is over here in FinViz. FinViz is free for everybody, finviz.com. And again, I'm just highlighting the tools and showing you what I'm doing. I'm not going to do this in the newsletter, but you can do it on your own. You click on this top gainer. And when you go to this top gainer, you can go to the scanner. Let's see. We're gonna do top gainers, and it lists them. If you go to overview right there, just go to the top gainers and the signals, top gainers. That's gonna basically be your top gainers of the day, and you can look at these now. FinViz, it's 15 minutes behind, and it's yesterday. So if you want something that's a little bit more timely, go to investing.com. Okay, they have pre-market most active stocks, and this you can see GreenWave, down 1.1%. Q Health up 30%. Net Capital NCPL up 87%. Pineapple Holdings, which is I think energy or something, it's up 122%. Or I'm sorry, Aconda's up 122%. Pineapple was a meme stock. That's down 22%. Buru, which is the symbol. But you want to use some of these websites, just, top gaining stocks in the market, pre-market. Just Google it. The tools are out there for you to find this stuff. It's just a matter of trying to find it. It's not that hard. But again, look at that. Now, we're going to go back to our Seeking Alpha, because what I want to do is go to this market data. And what I want to show is, hey, where are we going to go? And we're going to look at these sectors: technology, healthcare, consumer staples, XLU, XLY, XLC, all of this stuff. And look at yesterday. There wasn't one sector that was up. When we look at 1 month, all of a sudden, energy is in the doghouse. It's down 5%. Year to date, it's one of the leaders, up 8%. But you look at that 1 month, it's down 5%. Over 1 year, you're up 13%. So you want to take a look at these U.S. equities. There's also bonds in here. We can talk about bonds, how bonds rose yesterday, and how you can see 1 month ago how they were you want to take a look at the 10-year and the 2-year. Those are the big ones. And when they're inverted, meaning the 2-year should be below the 10-year, but it's what's called inverted. It's at the 2-year is at 4.96. The 10-year is at 4.5. You should be getting less. You should be getting paid by the U.S. less money over 2 years, because a 10-year treasury is a commitment, and they're going to pay you more for that 10 years. But it's what's called inverted. And so the 2s and 10s is it's the longest inversion in history. And it's not great. It's not great at all. But I want to take a look at these sectors, because what I want to do is take you over here, and you can sign up for Seeking Alpha. You can see these for free. I don't think they charge for this kind of stuff. But if you take a look at those U.S. equity sectors, and then you go over to your Trendspider, and what I want to do is, and I include this in a list when you sign up for Trendspider. Again, there's a sale going on for this weekend. And what we're going to do is we're going to take a look in the 4-hour algorithm. Where are we in these sectors? Well, XLC, which is the communication sector, where are we? We're over the 200-day. The 50 days moving positive. You don't have confirmation. It's turning over. The RSI, 49. MACD, a little bit high, crossing over. XLP, which is the consumer staples. Turning over. I mean, it went for quite a run. Look at the MACD, turning over. RSI, 44. You don't have confirmation. Do you want to buy in? Algorithm has you in, but it's probably going to get you out very soon. XLE, which is energy. We talked about this one being down. We talked about support levels in the past on XLE being 93. It's gone through that. Algorithm has you out. RSI, 31. The MACD on the oscillator still pointing down. Do you want to buy this? I would say wait for the 200-day at 89. But energy sector, it's weak right now. To go back and to Warren Buffett, you want to be greedy when others are fearful, and be fearful when others are greedy. Right now, in the tech sector, people are greedy. Be fearful of that. Be fearful of the Qs. Energy sector, it's not a bad play, but you've got to wait for confirmation. You don't want to try and time this. Look at the way the algorithm doesn't time the bottom here. Okay, it doesn't time the bottom. It looks for an entry. It found an entry here at 80.56, and then it takes it, and boom, 17% gain in a spider sector? That's crazy. Financials have been on fire. Let's take a look at the 4-hour algorithm. Turning over. RSI at 40. So again, you're seeing some weakness in the financial sector. Let's look at healthcare, XLV. What are you seeing? You're seeing some weakness, but the MACD is still high up. The RSI at 52. Let's look at XLB, which is materials. You want to take a look at this. Again, the MACD, it's crossing up, it's crossing under. The RSI 41 still probably has room to go down. Industrials, which have just been a year-to-date winner. The MACD is right on the oscillator. It's crossed down on the strike line. And again, the RSI. If you have no idea what I'm talking about, go to my my paid newsletter. It's Daily Stock Pick. I give you a free 7-day trial. So take the weekend and read some of these things. Go to the Education Center right on the front page, and you see all. I urge you, if you don't know what I'm talking about from a technical standpoint, this will take you probably a day to read. Now, to actually comprehend it, you have to put it into practice. You don't need Trendspider. You can get a free charting tool. You know what has a free charting tool? Webull. And if you want to sign up for Webull and get free stocks, just use that fourth link. But again, you have to look at these sectors. Now, one that I will tell you, BRK.B, this has been in a trading range. I posted this trading range back here in March. Well, what have we done? It hasn't changed. So you're in this trading range. Now, what does that do for the stock? Well, it's simply for a weekly, it puts it into this kind of, hey, we're at all-time highs and the MACD is still high, but the RSI is going down. For something like a BRK.B, a Berkshire, or a Spider sector, you just want to make sure that you're getting in at a time where it's not overpriced like this. At this time, when the MACD was up this high, the RSI was at 76, and it was March of 2022, and you had this correction, you didn't want to buy at this one. But, as you went down, were you happy buying here at 317? Probably not, because you still had some, a good move down, but you're happy now. So, time frame matters, and these sectors are not going to move a ton, but you want to take a look at that. And again, that's how you use these tools to look at stuff. And that's how if you want to trade, go and find those biggest movers. Trade them on the 5-minute algorithm. And we can look at the 5-minute algorithm right now. It will not do well on something like Berkshire. But and I tell people on this one, you're really looking for the entry on this. You're looking for the entry in a 5-minute. But from a long term, BRK.B is one that you want to hold for the long term. Now, FFIE, when you're looking at this, you're looking at the entry. You could have made 6% from yesterday to this morning. Look, you have confirmation. FFIE is going up. You're looking for the entry. But I will tell you on this 5-minute, I have not tuned the exit well enough yet. I would urge you to play with the exit. The entrance, absolutely perfect on this. So if you want any of this stuff, go ahead and sign up for Trendspider. Go and look for it. You get everything. You get my core portfolio. You get covered call ETFs. You get energy names, levered ETFs, low-cost Vanguard ETFs, Spider sectors, the complete daily stock pick watch list. You get even crypto that you can watch. So take a look at that stuff. Again, I wanted to point out how I use these tools to find stuff, to look for things. It's not all paid tools. There's free stuff like FinViz out there. But what you really want to do is make sure that you are looking at this. Look at this. I mean, this is the 4-hour algorithm on something like FFIE. FFIE right now, if you bought at 5 cents and you didn't get out at $3.60 or $3.90, you're crazy. If you didn't get out at $3, you're nuts. It's back down to $1.19, but the 4-hour algorithm still has you in. Identify which algorithm is going to perform best. FFIE is probably going bankrupt. It is not a good company to buy and hold. Something like Apple, you're not going to use the 5-minute on something like Apple. It doesn't move enough. So understand the difference between all of those things and then make your choice. And I'm telling you, Trendspider can become your absolute best friend. Other than, me with my newsletter. Let's talk about GCT, because GCT, they finally responded. And they said, hey, the report demonstrates a fundamental lack of understanding of the company's business. There is no merit to it, blah, blah, blah. How did you trade GCT? Well, yesterday it was up 8.45%. We talk about it a lot. Any reaction in the market is an overreaction. Where did the 4-hour algorithm get you in? It hasn't yet. Now, do you want to get into this one? I would say because it's an alpha pick, and alpha picks do quantify as buy and hold. If you want alpha picks, it's a portfolio of stocks. It's about 20 stocks, and they hold a portfolio. It's from July 1st till April. It's up 122%. The S&P is up 35%. You hear about it all the time. If a money manager doesn't beat the S&P, there's no reason to pay that percentage. Well, this is $449. I don't know what percentage that is of your portfolio, but you can absolutely gain money with these picks. GCT is just one of those picks. Now, as we look at it on a chart, you can see it was an alpha pick right here at 31, where you're trading right at 32. And I've said this before, when we go to the weekly, this one has made quite a trend. I thought that 25 was a pretty good bounce point on that, and it bounced right off of 25. If we go below 25, you probably want to dump this. Now, on the weekly, it does look like you still may have some more downside. You may just trade sideways on this. But again, from an alpha pick standpoint, if you want alpha picks, you go over to the link tree and you click that third link, alpha picks. But it's basically 2 data-driven stocks each month, alerts you when the ratings to sell and buy, and access to alpha picks over 20 days. You get everything on day one. If you don't know about fundamental tech analysis, get alpha picks. It will become your best friend. GCT is just one of those that they picked. And I don't think that you run for the hills with this one. It is a long-term play. And buying at 31, yes, you should have bought at 25. And I know a few people bought at 35 or 25. I bought at 40. I'm still sitting there and holding. The reason is it wasn't a short-term play. It's a long-term play. This isn't one where you throw a ton of money in. Now, the algorithm makes you 254% over 21 months with 16 positions. So even if you don't sign up for alpha picks, and say you're just a Gary fan and you see it in my newsletter, you can sign up and just trade the algorithm with it. Again, I got in at 40. I thought this 38 had confirmation. I made a bad play. Should have had a stop loss in at 5%. Would have saved me a bunch of money, but I didn't play it well enough. We all make mistakes. They did respond. Again, remember that. Any reaction is an overreaction in the market, and I wanted you to be aware of that. So let's go over here. I've said it before. We are in an AI market, and you saw that with NVDA yesterday. We're also in a GLP-1 market, and this article argues, and I haven't read it, but it's exactly what you want from Seeking Alpha. Seeking Alpha analysts ask, is Eli Lilly or Novo Nordisk a better investment? This is part of their Seeking Alpha premium, and it's 20% off. This is the value that it brings you. And again, I'm just telling you the tools that I use to try and manage my own portfolio and create this letter. And it's a great, great opportunity for you to read up on GLP-1. If you don't know anything about GLP-1, you can Google GLP-1. I mean, we can just go GLP-1 ETF. Let's go and look, because Ozempic Roundhill has a weight loss ETF right here. I don't know what the symbol is. Why OZEM? OZEM, top 5 holdings: Lilly, Novo, Innovent, Seal. You can Google that stuff. Don't be afraid. And don't be afraid to use AI. AI is really good as well. So, let's talk about Earnings Hub, because Earnings Hub is my favorite earnings website. I'm going to just get out of that. Earnings Hub is my favorite website. And we talked yesterday in the newsletter. I thought DEC was going to be a good one. They killed it on earnings. The lower expectation of earnings at $2.87, they killed it. Up their guidance. This is a high-flying stock. I said, hey, if you want to take the chance on this one, if you run with Hoka shoes, because they own Hoka shoes, you can take this one. 903. It's up 12% in pre-market. They killed it. Absolutely killed it. Algorithm makes you 173%. It got you in at 825. 825. So again, look at the RSI. Look at the MACD. They were all poised for a good move up, and it did get a move up. Is it too high? I'd probably be selling and taking the profits after a nice 12% gain. I would probably not listen to the algorithm and wait for this one. I would probably just sell it. So I think it's a good one. Let's see. Ethereum. The SEC approved Ethereum, ETFs. You can see the pop here was when the news kind of came out. The rumor. It's up. If you want to trade Ethereum ETF, which is the grayscale Ethereum ETF, the algorithm makes you 221% over 24 months, 28 positions, so maybe one. Got you in here at 21. Your average win 32%. So let's see, is this 32% up? It right now is 56. I would be selling the news. You basically buy the news, sell the event. So you don't want to get into this one until you start to, for Bitcoin, it was an absolute, look at this. This was March. Okay, if we go back to January, what did Ethereum do for January? This was a sell buy the news. And then they approved it, and boom, all of a sudden Ethereum, we can go and look at GBTC because GBTC was that kind of chart where you just saw this was the news of the ETF, and then you went down, and you've been in a run ever since. But, there's other crypto ETFs that are significantly cheaper than GBTC. But again, they approved it, so I think it's interesting. Oh, I do have another one, GLP-1. VRTX, I wrote, don't sleep on this, Vertex Pharmaceuticals. They're rumored to have a GLP-1, well, not rumored. It actually got approved, and that's why you see this huge run up here, is because it got approved. But you're still like 2, 3, maybe 4 years out from it actually becoming like an Ozempic or Wegovy, something of that sort. So, again, play it for what it is. One thing I've been seeing a lot of, and you got to keep an eye out on the news, is that Meta and Amazon may charge for their digital assistants. So Amazon has been beefing up their Alexa division. I'll find some news stories if you want it, but I'm just kind of going to leave this out there. I think this is an interesting play because nobody's announced anything yet. And you do have a June 7th, I think, Apple event for WWDC. Where's Apple right now? Well, as you can see with Apple, look at how it's turned down. It's at 188. You have this little gap here between 183 and 184, probably some type of support. Am I selling it? No. Am I trimming it in my retirement account? Maybe. I mean, again, buybacks. The buyback was great. The algorithm here, it makes you 43.6%. Buying and holding over 2 years makes you 35%. It's 30 positions in Apple, and you can see quite a bit of losses there where it got you in, got you out with quick losses. You've got to make determination of the entrance in. You could optimize this, this algorithm, but the entrance in, I do think, is an A+ setup for an entrance. You can see the MACD going up. You can see the RSI going up. Right before earnings, great buy at 169. I mean, let's just talk Apple for a second, because if you bought at 169 where the algorithm told you, and then you said, 190 is a resistance level, that's a 15% gain in 26 days. 15% gain in 26 days. That's phenomenal. Did you know to get out? No. I would argue that you didn't know to get out. So if you wait for the algorithm probably may get you out. You might have a 10% gain. Your average win, 10% on the algorithm. So do I think we're coming down on Apple? I think you're coming down to 184, 185. Again, we are not in a NVIDIA market where you're blowing out earnings. You are now in a don't fight the Fed market. So I think it's interesting to see that. Again, Apple is kind of going to be probably the first one that announces a paid AI assistant on the iPhone. I think that's going to drive a significant upgrade cycle in the iPhone. So I'm holding on to my Apple. We talked about this resistance earlier at 200. Until it becomes support, it is resistance. So you want to take a look as we get closer to that 200. If we start to move back up, you want to take a look at trimming your positions and making sure you can always buy back at a higher rate. Apple is one of those that if it starts to move, it'll move quickly. Shep, our social request, Shep asked, do you foresee a big run up after NVIDIA split? Could it run to 150, 200? Assuming a feeding frenzy does occur, would love to know if selling a portion would make sense to take advantage of that. So here's where I see NVIDIA, and this would be the way I would trade NVIDIA right now. Now, am I trading NVIDIA? No. I am holding NVIDIA. I have a good portion that was bought in the 300s, 400s, somewhere in that neighborhood, that is in my brokerage account. It is entering into long-term this year. So am I selling it? No, because I want to pay 15% taxes. I don't want to pay income tax on a short-term sale. Could I optimize it? Absolutely. How did I optimize it? I bought the same amount at a higher price in my retirement account, and I've traded that one. Now, did I trade out of it here? No. Am I trading out of it here? No. I'm waiting a few days. Now, that split that's happening on January 6th, I think, or I'm sorry, June 6th, it says June 10th here. You'd have to look up the date. But I do expect a retail frenzy when it comes down to the $100. I don't expect this one to trade back. If it gets below $1,000, I would say you buy more. Now, selling it, that's completely personal. Shep, that's your choice. I am not selling this. But if it dips below 1,000, I am absolutely buying more. Am I buying more here at 1044? I mean, you're kind of quibbling because say I buy 10 shares, okay? That's $10,000. $10,000. And say the different, I wait for it to come down to 1,000. It's 10,000. If I wait for it if I don't wait for it, it's $10,400. Does $400 make or break my lifestyle? No. And if it's long-term, I'm just buying those 10 shares. So, but I do like to wait 3 days. I think you're just crunched up against this time frame where this is the king. This didn't get taken down in the market yesterday. The valuation, and I showed it yesterday, the valuation, again, we can go back here to Seeking Alpha, and this is how I create this chart. You just go over to the chart and you say, you know what? I want to look at the valuation of NVIDIA. And we're going to select metrics. And I'm going to get out of the performance. I don't want the price return, but I want the valuation. And what do you choose? You choose PE. Now, it's trailing 12 months. So you choose the PE. It's trailing 12 months. They don't have the forward because nobody knows what's going to go on. But this stock has never been cheaper. Again, it was cheaper before the earnings on 5/21 at 55, but it's only at 60. Yes, it's trading that much. Imagine if this goes all the way like it was in 2023 to 244 times. That's the crazy part about this is it just got cheaper. So am I telling you to sell it? No. Am I telling you to buy it? Yeah, if it gets under 1,000 in the next couple of days, I'm telling you to buy it. If we go below 1,000 before that 10-for-1 split, I'm actually loading up. And I'm not doing it as a trade. I'll be clear. This would be an investment. This would be a long-term investment. And am I selling some at 1,100 if we get up to 1,100? Absolutely, I'm selling some if we get to 1,100 before this split. I'm going to take some of that money that is in my my retirement account. I will not sell short-term in my brokerage, but it's all a personal decision. Butch, what are your thoughts on Dominion Energy? Virginia dominates the market for data centers in the U.S. The AI boom is creating a power boom for data centers. Dominion Energy provides electricity over 12 million square feet of commissioned data center space in Virginia. What are your thoughts? God, I mean, that is a perfect thesis. Again, let's take a look at the stock. Let's take a look at the chart. And then let's take a look at the fundamentals. I like the technicals first and then the chart second. Now, If you trade this in the 4-hour algorithm, okay, you are in at 49. It's at 52 right now. We're seeing a little button hook there. Again, if you don't know any of these terms, go to my paid newsletter, sign up, free 7-day trial. But again, you're seeing this button hook and the button hook down. I'm seeing a little bit of weakness. RSI down at 47. Even though you saw that button hook of just a couple of dollars a share, boy, that RSI came down fast. What did we see the last time that this came down here? We saw a little bump up, but then we saw a bigger push down. Now, let's look at the MACD. The last time the RSI and the MACD were kind of in this space, what'd you see? You saw a lot of volatility around this. So I'm seeing a little bit of volatility. Do I get in this now? Their earnings are done, so I don't see a huge increase in catalysts between now and their next earnings, which are in August. But let's take a look at Dominion Energy as far as the fundamentals go, and we'll use Seeking Alpha. Again, Seeking Alpha, best website to look at the fundamentals. We can look at the valuation. It's a B, and this is the quant. So Seeking Alpha analysts say it's a buy. Wall Street says it's a hold. If we click on the Wall Street and we can look, it's been a hold forever. Now, the average price target is 51.76. You have 17 analysts who have analyzed this in the last 90 days. 13 say hold. And we'll take a look at some of the revisions. Let's look at how it trades versus the price target. You can see this is a utility, and utilities have just been coming down. So you can take a look. That one has been coming down, and we're close to the bottom here. It trades right along with the price target, but the price targets are moving back up. Now, let's take a look at the revisions, because the revisions will be important. Over the last 90 days, 2 have said up. 11 have said down. Nobody said the revenue is going to go up. Only 5 down. That's not boding well for this stock. And again, that's the Wall Street look. Now, when we look at the quant rating, we can see it's been a hold for a while. And it's even been a sell. Again, it hasn't had the love. And momentum is a B+. The profitability is a D. And the reason is the return on capital. So what you have to understand about utilities and things, they are regulated. So they're regulated to try and make money. They can't raise rates effectively, but they have to spend a ton of money to produce that energy. So while the energy for a utility is expensive, I'd say if you really want to do data centers and things, I would say invest in something like EQT, which is natural gas. And we could take a look at, EQT stuff. But EQT, solid performer. Year to date, it is, let's see, it's up 4%. Not horrible. If you want to look at some peers, again, this is natural gas. Coterra, Marathon Oil, Texas Pacific Land. You can take it, Permian Resources. You can take a look at these. We can look at, let's look at total return. We're going to look at total return because that includes dividends. So over 1 year, you can see EQT up 13%, TPL up 37%, Marathon Oil up 11%, PR, Permian Resources up 67%. So you want to take a look at these, take a look at them. But I don't know that I'd go utilities for the actual play on AI. I think I'd go with the energy generators because they can raise the money. The utilities can't raise effectively. And that's where, utilities, traditionally, the XLU, we can take a look at the XLU because that's just a bunch of utilities here. We'll take a look at the chart, XLU. Look at how good that's performed in the short term. Okay? Short term, you're killing it in the short term. Algorithm makes you 13%. If you just bought and held, you're down 3%. Because let's look at the long term of this. The long term over this, you're in this trading range. And I said this when we were looking at this from a weekly perspective. I drew this chart. And this channel right here is good. And I said, here, if this is the bottom, you've got a 35% to the upside. And I said, if this is just a stop on the way to the new all-time highs, which it could be, if you're just going to continue this trend and this was just a downward trend, you could still have 11%. But when we go to the XLU, and we're going to go XLU and we're going to look at the holdings, because Dominion Energy is one of them. Nextera is the number one. And Nextera Energy makes up 14% of this. Dominion Energy is down here at 4%. Now, do I think that Nextera is going to outbeat? No. 1 year, you're only up 1%. Year to date, though, you're up 24%. Timing matters. So when you buy something like this, it does matter when you get into it. But utilities typically are not a trade. There's something that a guy named Walter, who fought in World War II, who has a flannel blanket over his lap in a rocking chair talking about the good times in his home to other 90 and 100-year-olds. They need income. That's where utilities come in. And that's where I'm like, I'm not a huge fan. I'm more of a fan of growth. But you can't argue with the momentum of something like Nextera. You can see it's an A+. Look, 3-month performance, 32%. The sector, XLU, is up 5%. This is outperforming the sector. So use your tools, understand what you're going into. AI power stocks. Vertiv is one of the AI power stocks. VRTV, I think it is. Vertiv, VRTV. This is a hot one. This was asked about before. We can go and, why is it doing that? We want to look at this. It's just messing up. Hold on. We're going to go VRTV from the home. Then it'll pull it up. There we go. Oh, why is it doing this? It's defunct since November 29. No. Yeah, I guess it's defunct. But that's what Butch mentioned. Yeah. Okay. So let's look at some scans. And when I looked at scans today, just so you know what scans are, I take this I take my core portfolio, I take all of the lists that I give you when you sign up for Trendspider. I take the Dow, I take the NASDAQ, and I take the S&P, and I look for bullish trends in the 4-hour algorithm. And I say, what stocks are in a bullish trend? Well, when you have a down day like yesterday, you're not going to get a ton of stocks that are bullish. One of them that was bullish, and it has an entry in the algorithm, is Cigna. Cigna's healthcare. So you want to take a look at this one, 337. MACD down low. Dividend ex-date coming up on June 4th. RSI, super low. It's trading down 0.2%. So 337. Do you want to buy it? Well, if you believe that 200-day is going to provide support, the 50-day is moving negative, but if that 200-day is going to provide support, then you want to get into it. Now, I will point out, a while ago, back in, looks like December, when somebody asked me about Cigna, I said, here's the weekly channel as I see it. And I drew this channel, and I said, from here at 316, you probably have 23% to get to that upside. Now, did you get to that upside? 365 back here in March? It pulled it, and then it pulled back. That doesn't mean that it's a horrible, horrible buy. Because look at this one. You had this one in October 2020 go up, and then it started to pull back and trade a little sideways. Then you went back up. So this one may just be a little respite here. But then in the short term, again, on the 4-hour algorithm, it has an entry. Your average win is 3.96%. It is not a huge stock that you look to trade. If you want to trade something, find something that's volatile to trade. This is one that you would buy and hold because you like the fundamentals in the stock. Now, one that has gone absolutely bananas is GE. GE has been just nuts. It got you out with a little loss here. Your average win is 37% over the last 24 months. 37% over the last 24 months. That is crazy for a stock like this. Now, remember, they just split into 3. So, the valuation on this one, a little nuts. We can go and look at it. But when I went to look, it crossed up. When I went to look at the weekly, that's where you can really see how nuts this one has gone. Look at how those Bollinger Bands cinched up, how it popped up here, and how it's just, look at when they cinched up right there. You want to use your tools. Again, we looked at the MACD crossing up. We looked at the RSI coming off of 51, and it just shot up there. What did the price do? It shot up. Take a look at that A+ setup to get in right there on the weekly, and you've made 81% over 6 months. 6 months. So again, the algorithm guides you in for the medium term, which is the 4 hour, but you've got to take a look at the weekly charts. There's how you take a look and use your tools. Now, there's a ton of leveraged ETFs that got cross ups, TSLQ, MAGQ, PSQ. I include all of these in the newsletter. So go and take a look at those. And if you have Trendspider, go and chart them in the 4 hour algorithm. You'll see entries on those. Now, as far as the markets go, there's a lot of green on my screen right now. So again, any reaction in the market is an overreaction. Yesterday was normal. We just had a breath. Hey, NVDA earnings came out. We got to not fight the Fed now. So that's all that was. It wasn't anything. It's Friday before a 3-day weekend. Don't go crazy and don't throw, a bunch of money into the market and then something happens this weekend and on Tuesday we wind up, even lower. I think today should be fairly moderate, even if for some reason the bears show up and we start to see an afternoon crash. I would not be making significant portfolio changes. If you have a triple levered ETF, if you are in NVDL, which is a double daily on NVIDIA, get out. It's not worth holding through a 3-day weekend. If you have something volatile in your portfolio, get out. Today is the day that you want to. Fridays are always a day to take a look at your portfolio, understand what you have going into the weekend, and will I sleep over the weekend because I can't trade it? It's not Bitcoin. It's not crypto. It's not open 24/7. You can't trade on those things. So if you have any questions, hit me up. Remember, all of these links, all of those sales are available on Linktree, Trendspider. If you get Trendspider this weekend, what you need to do is email me. You sign up, you go over here, you send me a screenshot of your sign up from the email address that you signed up with. And where's my email address? It's right here on the Linktree, upper right, dailystockpick3@gmail.com. You email me, and I will email you back the welcome letter that includes everything that you need to import. Includes everything that you need. Oh, and Mike's telling me Vertiv is VRT. And that one came up. I think it's a alpha pick, if I'm not mistaken. VRT is the one that I was looking for. Yeah, mutual funds overweight in Q1 in their hunt for AI exposure. Oh, yeah, this is the article that I included Tuesday. The real AI stock darling is Vertiv. So VRT. I knew it was VRT. I think I included the V. But yeah, Vertiv is the one that you want to look at. So it's a great buy, honestly. In my mind, I mean, you look at year to date, you're up 112%. I mean, in 5 months, you've doubled your freaking money. Is the valuation crazy? Yes. But we talked about, if you're new here, the PEG ratio, which is Steve Kress's favorite, who is the guy who's in charge of the quant at Seeking Alpha. The PEG is not crazy. It's trading 58% below what the sector is trading. So, and Mike, I'll take a look at EGY after I close this podcast out. Thank you guys. Take care. Have a great weekend. Enjoy it. Barbecue. Do whatever you need to do. I'm plant-based, so I will be enjoying probably, well, I'm not plant-based totally. I do eat some ground beef every now and then. In fact, I'm on a protein diet now. If you're interested in dieting and stuff like that, I mean, there's basically my YouTube channel is lawns, car washing, and nutrition. And that's my entire YouTube channel. Oh, and it does have stocks in there. It does have stocks, but those are my interests. So, and I will continue to yell at the dogs. Yes, there was some requests over the past few days that I continue to yell at the dogs. The dogs have been acting pretty well. I mean, they're all sleeping. The two of them are sleeping down below. And when I do yell at them, by the way, they just stare at me and wag their tails. They don't even know that I yell. They when I'm angry, they don't even know it. They just look at me with those eyes, wag their tails, and they are happy as can be. I yell at Penny for barking outside and causing hell. But, it is what it is. I love those two. Okay, take care. See you guys. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake hopes and fears. Tune in daily, don't miss the single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.